Problems in its British operations, coupled with higher funding costs, have contributed to a 16% fall in first-half earnings for National Australia Bank. That's prompted one senior analyst to warn that NAB has some tough choices to make over its strategy of cutting prices to drive market share in home lending. Andrew Robertson reports.
Lending conditions aren't what they used to be, but despite that, National Australia Bank boss Cameron Klein was reasonably pleased with the result.
We obviously have had to deal with the worsening situation in the UK, but the core Australian franchise has performed quite well. We've gained market share in all of our segments. We've been able to, our capital position is strong, we've been able to manage our costs.
Net profit was down 16% to just over $2 billion, thanks in large part to those already announced problems in Britain. Stripping those one-off items out, its cash profit was up 6% to $2.8 billion. The bank will pay a fully franked interim dividend of 90 cents a share, up 6 cents on last year. But it's NAB's much publicised strategy to have the lowest customer costs of all the majors that concerns BBY banking analyst Brett LeMessurier.
The only reason that income grew from the second half of 2011 financial year to the first half of the current financial year was trading income. If you took that out, then income actually fell by 1%.
A look through NAB's results supports that view. Home lending growth, although down on last year, is still running at more than double the industry growth. At the same time, home loan interest margins are falling.
Basically what it needs to do is offer better service for its and better products for its customers. Focus on that more than price.
A common complaint from business, and small business in particular, is that when it comes to lending, banks treat them more harshly than home mortgage borrowers. On the surface, NAB's results seem to bear that out, where business lending margins are 25% higher than personal lending margins. On that score, though, business was getting little sympathy from Cameron Klein.
In many cases, businesses will use all forms of security, but you still have to look at, what does that do in terms of the loan-to-value ratio on the house? What is the business they're trying to finance? What's the interest cover going to be? There's many factors that go into it.
NAB is the last of the big four to report its half-year profit. The majors earned a combined $12 billion after tax, with an average return on equity of 16%. But profit has grown at less than the rate of inflation, which accounting firm KPMG puts down to the increasing funding costs.
In the current period, it's really coming more from deposit competition, as the banks are trying to win more and more of the deposit market, both to increase their level of stable funding, but also to wean themselves off the reliance on international wholesale funding.
The debate over bank funding costs will be sparked again tomorrow, when ANZ is expected to blame those rising costs on its decision not to pass on in full the Reserve Bank's half percentage point cut in interest rates.